This is the Financial News Network. I'm Christy Duffy. McDonald's beat analyst consensus estimates for both EPS and revenues in the third quarter. The company also reported same-store sales for the month of September, which were higher than expected. With me to discuss the Big Mac maker is Mark Kalinowski of Janney Capital Markets. Mark, how did McDonald's earnings compare to your own expectations for the September quarter?
Third quarter EPS of $1.29 came in 2 cents above our forecast and 5 cents above consensus, so a very strong number.
And how was McDonald's September U.S. same-store sales? You predicted APMEA as substantially stronger for September same-store sales. Did developing countries show strength as well?
Well, they trounced the consensus estimate of 3.8%. They posted a number of 5.7%, and that was very close to our high-on-the-street projection of 6.1%. McDonald's was very strong around the world. We think in Asia that China and Australia were both very robust during September.
How has a weaker dollar impacted earnings?
It cost them, I believe, 3 cents of EPS during the third quarter. McDonald's commented that in the fourth quarter they now expect currencies to hurt their EPS only by a penny. So in recent weeks, currencies have moved less against McDonald's.
Okay, the company regionally tested in Canada 3 new burgers, including the Pounder Deluxe, Smokehouse Deluxe, and Angus Third Pounder for a month from August to early September. Did the company determine or mention on the call whether those will go national or international? What kind of earnings impact could these new product offerings have?
I haven't heard anything from the company specific to these particular burgers, but just in general, Canada's been a very strong incubator of products, some of which make their way to the U.S. menu. So just in general right now, we're expecting McDonald's to earn $4.89 per share in 2011, but that's based off of 2% same-store sales growth. If McDonald's can do better than that, then the earnings number they post next year may be above our current estimate of $4.89.
McDonald's plans to open 45 restaurants in India next year, on top of 35 this year. The company will have 210 stores in the country by the end of 2010. What percentage of revenue came out of India this quarter, and how much growth is expected there in the longer term as these stores open up?
Well, India right now is a fairly small percentage of revenues. When you look at their store base there compared to McDonald's worldwide store base of well over 30,000, it's less than 1%. That said, if you look out over the next 20, 30 years, the growth rate in India should be fairly high as more folks on the subcontinent become middle class.
Well, shares of the company hit a new all-time high after the release. Where do you see the stock headed?
Fair Value Restaurant right now is $90, and McDonald's remains our highest conviction restaurant stock idea at present.
All right, Mark, and what's your top pick in the sector?
Technically, Yum Brands is our top pick. We like both stocks a lot. The advantage of Yum is they're a little bit more leveraged to China. The advantage of McDonald's is it's a little bit lower risk stock.
Thank you very much. For further updates, make sure you're subscribed to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.